On Point, hosted by Peter Van Aardrijk. Conversations with interesting and informative experts on technology, branding, culture, social media marketing, and other great topics.
Hello again, everybody. I'm Peter Van Aardrijk, your host for On Point, brought to you by our good friends at Wells Media, which includes Carrier Management, Insurance Journal, and other fine publications. Our guest today is Brando Guerrero, who is founder of Urbanely Affable, a fractional consulting practice focused on insurance distribution strategy. We're going to talk a lot about distribution of insurance today via agents and other means. Welcome, Brando.
Thank you so much, Peter, for having me. It is a pleasure.
Yeah, it's cool, and we'll get into why we're talking here in a minute, more specifically. Just a quick note for the listeners. This is good news, bad news scenario that I kind of, my voice is a little shaky today for this recording, but the good news is Brando's going to have a lot to share, so you will be spared from my normal diatribes and rants, because if I lose my voice, Brando's going to jump right in. Okay.
That's right.
All right, my friend. Tell us a little bit about where you're from originally and about your career, because it's a couple of decades in insurance distribution with some name brands I think our readers will know about.
Absolutely. I grew up in a small town in central Iowa, and I started my career in Des Moines, which, as you might know, Des Moines is one of the insurance capitals of the world. So I was surrounded by the industry from the very beginning. And my first role wasn't technical in any way. It was actually a community outreach position where I represented the company in the community. It was, very visible, a lot of goodwill work. And looking back, that's where I developed the instinct for building relationships that have carried through in everything that I do to this day.
Yeah, then what happened after Des Moines, which is, I've been there. It is, you're right. It's like a mini Hartford or Chicago when it comes to insurance companies and a presence.
You're absolutely right. And here's the irony in your comment. After a few years in Des Moines, I was relocated to Hartford, Connecticut to work the cactus side of the business that I was working within. Yeah, in New England. Yep.
All right. And what happened after that? Did you get to work with independent agent distribution?
I did. From there, I was relocated to Queens, New York, of all places, having never been to that part of the city, to open up an office and recruit agents. And I recruited about 12 agents and deployed about half of them before I transitioned into my next role. And one of the things that I'm most proud of during that role was learning managerial courage. And I remember basically having these recommendations from the corporate office that I was working from about opening up within a specific zip code in Queens. And I, very professionally pushed back because I said I wanted a zip code that would welcome all backgrounds. And eventually that office became known as the United Nations of Brando. And we had agents from every walk of life serving communities that looked like them. And I was really changing the face of what agents in that part of the organization looked like. And as you can imagine, there were some doubters, along the way because I was younger in my career. I was a newer leader in my position, and I was clearly not a native New Yorker, but we ended up having one of the most successful offices within our peer group within the organization nationally. And I was recognized for that, and I collected some hardware, as I like to call it.
Yeah, right. So what were the things you learned as a young manager? What did you find effective?
It's building trust. It is being able to support your teams. It is being able to empower them. And once you set that foundation and you build trust, you're leading from a completely different place. I would get calls from across the country asking, how is it that you've been able to find so much success in the location that you're in? Are your rates that good? And my response was, not a lot of companies are actively looking to grow double digits in downstate New York. It's finding the right people. It is putting them in the right space to be able to do what they do best, which is go out and drive growth. And we were doing so with intention. We were growing profitably. We were growing with the right customer segmentation, which was extremely important. And these individuals believed in what we were doing. And because of that, believe it or not, many of them still have their offices, they're thriving, and they've been able to do pretty well for themselves.
Okay, so what happened after all that experience? Where'd you move on to?
Yeah, after New York, I joined MetLife Auto and Home, that's what it was known back then. And eventually it was sold off to Farmers. And I was there for almost 5 years, helping build out a small commercial organization. And this is what I would describe as a career defining role because I was wearing every hat that you can think of, distribution, management, product, underwriting, technology build outs. We were a pretty small team, but we were extremely motivated in trying to make small commercial as streamlined and low touch, no touch as we possibly could. And eventually I relocated from the Northeast to Northern California to lead a personal line sales team during one of the most challenging times to be in the P&C insurance industry in the state. As you might know, wildfire exposure, rate challenges, carriers pulling out of the market entirely. And that experience taught me a lot about leading a distribution team when the product environment is literally working against you.
Right, right, right. So so your sweet spot and things that give you a lot of joy are managing sales teams, right? Sales management. Do I have that right?
Yeah, after 20 years on the carrier side, I realized the work I was most energized by was the strategic build out work. So as I think about designing distribution models, launching partner programs, figuring out go-to-market strategies, like that's what I came to realize really drives my passion. So I decided to do that full time through my own practice. And today I'm working with a national carrier on distribution strategy and channel development as a consultant.
Yeah, yeah. Before we get into the whole purpose of why we're talking, because of a LinkedIn post you made that I find fascinating. The whole thing about how do you think sales is evolving? What's changed and what hasn't changed? And I know a lot of young folks, young producers in particular, coming into the business, and it can be a little scary to get your arms around how to grow a book and how to perform. And it's a lot. There's a lot to it. But what do you think hasn't changed a lot, and what is new today with some of the younger generations selling to those younger generations?
Yeah, great question. I would say that a key skill set is mindset and emotional intelligence in sales. And I think part of why I feel so strongly about that is personally, I've only taken opportunities in my career that I truly believed in. And when you genuinely believe in what you're doing, people can sense that authenticity. And that's what builds trust. So I'll give you an example of what I mean. When I was at MetLife, there was someone on my team who would consistently call me on Friday afternoons because he was waiting on an answer from underwriting on, a piece of business that one of his appointed agents submitted. And the question might be, well, why did he call you? Right? Well, because I built an extremely strong working partnership with that underwriting team, and they would always return my phone call. And the reason that relationship worked is that I was extremely transparent about deals. And when I presented my case and I provided all of the information that I could, and they gave me a no, I didn't try to go around them or convince them to make the sale anyway. They trusted me because of that. And that's why consistently throughout my career, I've been effective working within highly matrix organizations and cross-functional teams. And folks have always said that I would do great in sales because of the ability to be able to build trust. And again, skill and strategy, matter. I don't want to dismiss that, but I think those are just table stakes, right? Again, this is my opinion. The differentiator, especially in distribution, partnership, sales, is having that emotional intelligence and being able to use that to build trust across all of the different departments that you're working within.
Yeah. So on a practical basis, then the mindset and emotional intelligence. Obviously, insurance coverage is an important thing. Loss control, risk management, those are really important things, and consumers need them, businesses need them. I think if salespeople could look at this as a way, really trying to help people, take away some of their pain, look around for the best combination of coverage and price if you're an independent agent, which we'll get to in a second. Those kinds of things. I don't know if it's. I don't like. I don't know if you need to call it sales. I think you're helping people, don't you think?
Absolutely. You establish yourself as a trusted business advisor. And that is completely different than being somebody that would be described as a salesperson. Because when you're an effective and trusted business advisor, again, think about the agent partners you're working with. They are business owners, and you get the opportunity to be able to position yourself as somebody that they can lean on to understand the greater industry. And you bring value to the conversations that you're having with them beyond your company's products and services. You are somebody that is going to help them navigate the complexity that we're all going through within the industry. And that's when you start getting invited to the inner workings of that particular, agency partnership. And that's where, again, you go from being just a, individual that shows up on a monthly basis to deliver an agency experience report to being a trusted advisor that is going to be part of that agent's long-term business, development strategies. And that again is a huge difference in how you're going to be successful within the industry long-term.
So let's talk about your post on LinkedIn called "The Middle Ground is Collapsing," and you wrote that the insurance distribution model is splitting into two very different paths, and carriers need to pick a lane fast. Now, what struck me about this, well, there's so much to talk about here, but that it feels to me like this, history doesn't necessarily repeat itself, but it kind of rhymes. And I think there's been chatter about this. Heck, even MetLife Auto and Home was a good example, perhaps, of having to pick a lane, pick a path. They're trying things that evolved. Every carrier has been through some kind of iteration. Maybe if nothing else, doubling down on what they've done well and really see that, or experiment, fail, get rid of it, try something new. So it's been around a while, but I feel like what you're getting to, the crux of this, is the technology, the pressure of technology, the opportunity of technology that's there today. That really feels different. So I think it's really worth talking about this. In terms of picking a lane with distribution, talk more about that. And then do you feel like this is like a major inflection point right now because you talked about picking a lane fast?
Yeah, great question. And, what I would share is that it's not so much a prediction, right? It's just what I've seen in the last 20 years of being in the industry, and especially the last 5 years. It's the way that personal lines and small commercial continues to be commoditized in the marketplace. It's how large national and multinational carriers are investing heavily into middle market, large and complex commercial and specialty lines. And you spoke on the technology piece. It's how AI is making automation cheaper, faster, and more efficient than any of us could have imagined, even a few years ago. So the question is, where do, say, some of the small regional carriers win? Where do the mutuals win? Because in the past, the answer has been, we'll do a little bit of everything. And we're seeing that now more today, that is not a viable long-term strategy. And again, I've seen carriers walk away from personal lines entirely just to focus solely on commercial. I've seen personal lines carriers walk away from auto just to focus on property. So these aren't just hypotheticals. This is actually what's happening. As you shared, MetLife Auto and Home, right? They decided to really focus on their non-PNC business and sold off that part of the book to Farmers. And it's more of a validation of the thesis that I have here, is that the market is rewarding focus and to a certain degree, punishing carriers who are trying to be all things to all customers.
Okay, so let's talk more about that. What else are you seeing in the marketplace that where you're confident about that prediction? Because it's kind of cool. Not challenging. I'm just saying.
Yeah,
What are you seeing out there?
Yeah, and this is again a great topic because we can all provide our own insight, and it is great dialogue. It is a great way for us to be able to take a look at the marketplace from perspective that we're going to obviously use from our own experiences. So some additional things to look at, in my opinion, agency M&A activity is at record levels. Carriers are restructuring their distribution strategies and teams. InsurTech investment has reshaped what customers expect from the buying experience, right? As I think about the pandemic accelerating digital adoption and distribution, that hasn't changed and is going to continue to be a space where organizations are going to continue to invest in. So the thing that's interesting to me is that the relationship-driven side of the industry hasn't gotten any weaker. It's actually gotten stronger because the risks that are left in this high-touch lane are more complex than ever before. Wildfire, cyber, climate-related exposures. You can't sell those through a form. You need a human who understands the risks. So both lanes are accelerating, and the space in the middle is getting squeezed from both sides. And the carriers who haven't picked a lane yet, in my opinion, are starting to run out of runway.
Well, I guess that leads to some of your examples in your post about how Lloyd's is going. Lloyd's has been involved in the higher touch, complex risk world, where on the other side, Geico and Progressive are dominating on personal lines, lower touch. Interesting how Progressive has passed Geico in market share in auto insurance fairly recently. The only one with more now is State Farm. And I think Geico is now getting into the IA channel, which is just fascinating. After decades of bashing agents, so easy a caveman could do it. We don't need, what do you need an agent for? Now they're appointing agents very carefully, and they're trying to, not trying, they are growing there. They're trying to keep it under wraps, but they're out there appointing agents because they see what Progressive has done with agents. Multi-distribution, with agents and direct, of course. It is interesting, that focus. And then we'll get into this in a second, but one of the outcomes of this failure to pick a lane has been the incredible growth of MGAs and program administrators and the whole wholesale space. Part of it is driven by prices and not admitted stress there in certain things like commercial property. But I think the success of the program business is really astonishing, and maybe that's part of the problem for those carriers who haven't picked a lane. It's just gonna get more stressful for them, I think. So not really a question. I'm just introducing maybe some new concepts we could talk about here.
Yeah, I again can talk about these topics all day, but I would just kind of share some thoughts here on NGAs. And NGAs are in a really strong position right now because their entire model is built around specialization, right? They don't have the legacy infrastructure problem that carriers have. They can spin up the program around a specific risk class. They can find the right capacity, and they can go to market extremely fast. And they can obviously move faster than carriers, and they can focus on narrow risk classes, and they can bridge the gap between carrier capacity and agent expertise in a way that creates real value for everyone in the chain. And you're seeing that the market is rewarding this focus, and that's what these MGAs are built for. And I think they're going to be the big winner here during this transition. And for independent agents, when it comes to NGAs, the question is this, right? So who are you aligning with? because if you're a generalist agency trying to be everything to everyone, you're in the same trap as a generalist carrier. So my feedback would be aligned with the partners who are investing in the lane that you want to serve, pick your specialty and go deep.
Yeah, that's exactly what's happening with. Somebody said to me at a conference, "Niches are riches." So yeah, the generalist agency, they shouldn't be saying it even because I don't think consumers and business owners want to work with a quote generalist. They want to work with somebody who specializes in their issues, don't you think?
I would absolutely agree with that. And this is, I think, a great segue into the Lloyd's comment in that Lloyd's built its entire model around specialization. And the syndicate structure forces focus on specific risk classes. And you don't have a syndicate trying to be everything to everyone, right? They pick their risks and they go deep. And because of that structure, they attract and retain extremely deep technical expertise. And the underwriters at Lloyd's, they know the risk classes at a level that most carrier generalists just can't match. And the model is rewarding that expertise. The broker to syndicate relationship is inherently consultative because it has to be. So there's no pretending to be high touch, right? The complexity of the risks they handle demands it. And every placement involves a real conversation between a broker who understands the client's exposure and an underwriter who understands that risk.
Yeah, it's really interesting. Let's, if you want, I can take a shot at State Farm, or you can. Do you think they can continue down the road with just captive agents? There's only one left, really.
Their model is definitely one that is what I would consider to be more of an outlier because they have been such an established carrier that did double down on personal lines and heavily focused on their auto new business writings, although they did get passed by Progressive here recently. So that one will be an interesting one to watch as we look at what their strategy will be over the next few years, because they are losing ground. And again, I've seen captives that have decided that they can no longer sustain that model because the economics do not work long term. So State Farm is going to be that one that we're all going to be watching as to how they're going to evolve the strategy if they decide that they're going to pivot.
Yeah, and we conduct an annual study called Channel Harvest Research, and we asked agents, about 2,000 respondents, about bundling and multi-policy discounts. This thing that was just a given when it first kind of emerged, whatever decade that was. A given in terms of improving account retention. You remember those old days of the value of having multiple policies with a consumer; they're less likely to leave. And then, Flo at Progressive's talking about bundling. Everybody's talking about, bundle home and auto and personal umbrella and so forth. Well, it's really hard for agents to do that sometimes, especially given what's happened in some of the more challenging property markets around the U.S., which are not just coastal. They're, there's convective storms everywhere. And in any given year, auto can be in the crapper and home is good and vice versa. And I don't know if that's one of the challenges State Farm is seeing too, where people say, my gosh, this whole combined premium of auto and home is just too much. So I need to shop around, and maybe it's multiple carriers, not multiple policies with one carrier. Do you think that's something to do with it, Brando?
Absolutely. The carriers who are still looking to multi-line their accounts, but have to play in states where they are not actively looking to grow their book of business. You talked about, again, the coastal states, or there are other states where they are just seeing their books of business not be profitable. They have to make those decisions. What do we do if we can't multi-line in these states, but we still want to hold on to, let's say it's the auto line? It's going to be a real interesting evolution of their go-to-market strategy because they're not going to be able to rely on what has worked for them consistently in the past. And technology will help that. Again, MGAs may come into play, right? We talked about Geico. And what's interesting is that you shared Geico had been the carrier most associated with direct to consumer. And now they're expanding into the IA space through a growing network of MGAs and partnerships with digital agencies. And the early focus is personal auto, but there are signals of expansion into commercial lines. And this matters because even Geico, again, has recognized that there are risks in customers they can't reach through direct alone. And the independent agency channel still matters a lot. But notice how they're entering, right? They're not just bolting an agency channel onto their existing direct operation, but they're doing it through an MGA structure that keeps the models separate. And that is true to who they are, right? They're prioritizing automation and digital first workflows in those agent relationships. And you can make an argument that Progressive is another example of doing something similar in that they had a massive direct business and a significant IA channel for years, but they kept those models operationally distinct, separate pricing, separate technology, separate customer experience. So they weren't blending them together. They saw the need to keep them completely separate.
So interesting. I wasn't aware. I hadn't thought about the MGA angle with Geico, but that definitely makes sense. They've been calling them come into our local office because they're afraid to say the word agency. They've been for a while, but they do have local quote offices. And these are licensed insurance people, insurance professionals doing the same thing a local independent agent office would do, In your town, you got a local quote Geico office. So it's like a stealth approach. But I think they got Warren Buffett's money and they're going to town with branding. So you mentioned State Farm too. A little more about they've got a lot of money. These big brands aren't going away. So that maybe you said they're an outlier. Certainly all of these companies who are major advertisers and getting kind of mind share of consumers when they are shopping are spending a lot of money on brand. So that could have that could mitigate and maybe delay some of these problems that smaller carriers are having. Certainly the super regionals and definitely the mid-sized regionals. So I want to ask you that, Brando. What do you think if you were advising the C-suite of a mid-sized regional carrier today? There's so many of them. There's thousands actually in the U.S. A couple thousand that fit that category. What would you say to them? What is the strategy you would outline for them in bullet point form, I guess?
Yeah, great question. I would say number one, define your risk appetite with deep clarity, not quote unquote, we write commercial and personal lines. I mean, like what specific risks are you best at understanding, pricing, and serving? What do your loss ratios tell you about where you actually have an edge? Because that is where you can go and find what that particular lane should be. And once you identify it, then go deep into it. Number two would be audit your distribution force against that risk appetite and start to ask questions. Are your current partners actually aligned with where you want to go? Are you carrying relationships that made sense 10 years ago, but don't match your strategy today? And then segment ruthlessly, right? Your top partners should know that your top partners, right? That they are who you have outlined as being your top partnerships. Number three is build your partner experience around that chosen lane. So for example, if you're high touch, invest in underwriting access, dedicated account management, and also agent enablement. And just as importantly, is stop spending on things that dilute that focus because you need to kill the initiatives that don't serve your lane. And those three decisions sound simple, but most carriers have never actually made them explicitly. So they've grown by saying yes to everything, right? Is you bring me an opportunity and I will find a way to write it. And the strategic discipline to say no is what's going to separate the winners from the middle. And this is exactly the kind of engagement that I take on, right? A carrier comes to me and says, we need to figure out our distribution model. And then we work through these decisions together. So that's part of the experience that I bring to the table.
Yeah, that's very very well said, Brando. I think of those three things, maybe they might do one of them or something. But I've heard carrier execs talk about culling their distribution plant, reducing the number of agencies that are, the top 20% that don't really give them much, or whatever the approach is. Because you're right, back in the day, more was better, more agents appointments, and then you start looking at the cost of those agent appointments, and the agents have their favorite carriers for different lines of business, and they just sit on the books and they're not doing much. So they've been trying to cut back and look for examples of like you said, a real partnership where it's a difference. But then you also have to do the other two things, right? So I think that's what's been going on. I don't know if the great unwashed carrier exec out there has been able to pull the trigger on all three. There's not a lot of them that do it, and we probably know who they are. We probably pick them out of a lineup. The ones who have done it, because there's just something about them. Agents say, "Oh yeah, they're really good at that." I can think of a few. I don't want to lead the witness though. You tell me if you want to cite some examples of what you're talking about. These three things.
Yeah, I can again share with you just from my personal experience that it's not what I would say the easiest conversations to have.
Yeah.
And how would I position it?
Yeah. It's not easy to have. You feel you're letting people down. You feel like a failure, but you have to. It's like tough love, man.
Yeah, and here's what I would share is that yes, I've seen this play out from the inside multiple times in my career. The most common version is something like a carrier launches a direct-to-consumer channel while still relying heavily on the independent agents. The agents feel betrayed. The internal teams start competing with each other for the same customer. Compensation plans conflict. The marketing message gets confused because on the one hand, you're trying to say, we value our customers, but then on the other hand, go buy direct for less, right? It's also in how these companies will allocate resources. So when you're trying to fund both a high touch service model, for example, or a low cost digital platform, neither one of them, they're not going to get enough investment to actually win, right? So then your digital platform is mediocre compared to the pure play carriers, and your service model is mediocre compared to the specialty carriers who are all in on these relationships. And you're trying to hedge your bets, but you're actually guaranteeing mediocrity on both sides. And it's not obviously an easy place to be in because difficult decisions do have to be made. And you do have to step away from one part of your organization that may have served you extremely well in the past, but it's no longer your identity moving forward.
Yeah. No, I'm having some laughs to myself, maybe more than you are on this, but I realize you're talking about people's jobs, lives, and like I said, some tough decisions have to be made. But I will say this: I used to work at the Big I, at the National Association, and I was always struck by agents who kind of knew all this already. Like I'm talking decades ago, they spoke this kind of language you're speaking from their perspective. They didn't want to have carrier partners that weren't doing what they needed from them. So it definitely is a two-way street, and that planning, that two-way planning is critical, and authenticity and honesty about and accountability about the numbers, where we're going. It's so important not just put a carrier on the books and just let them languish either. So it is a two-way street there. Don't you think that's true, Brando, in your experience?
Uh, Absolutely. You have to be extremely transparent with your agency partners because they are really your entire business model. If that is the chosen distribution strategy you've decided on, our agents are extremely intelligent and they will be able to see right through whatever it is that you're not fully committed to. Because again, the power of the IA is that they have relationships with multiple partners and they also tend to be extremely intelligent in what's going on in the marketplace. So if you show up without that clear intent, that clear strategy, they're going to quickly see you for what you're not and who you truly are. And if you don't know who you are, then take a look at the book of business that you have with, say, your top, 20, 25 partners. And that is going to tell you a whole lot about who the market sees you as versus who you think you are or where you want to go.
Yeah, that's very true. And I feel like when I was mentioning carriers, I'm also talking about the MGAs and the wholesalers out there because they filled a real gap, not only in capacity for stressful business to write, but also just in the focus on things like, a carrier will say we write restaurants. Well, what kind of restaurants? Well, there's a lot of programs that write, pizza parlors that serve beer and wine, like it's a whole program built around that set of risk as opposed to, like a Denny's or another family-owned deli or something. That focus on programs is the reason why you've seen so much growth in that space. And it used to be just a small percentage of the P&C market. Now, I mean, it's huge and it's growing. And that again, they're not very much different than a carrier in terms of what they provide the agents, except you don't have all those legacy issues as you mentioned with trying to do everything for everybody because we've always done it in our space that we're in right here as a mutual regional carrier, for example.
You're absolutely right. And for a long time in my career, I was not allowed to go out and actually appoint an MGA because there was concern around the model. There were too many degrees of separation between the risk and our underwriting teams, for example. But that is completely changed today. To your point, MGAs are now a really strategic growth lever, and agents who are working with, again, multiple partners, and one of them is being told that, hey, this carrier writes restaurants. Great. Well, what exactly, right? Because that's a pretty broad segment. So that goes back to the comment about specialization. You come to an agent and you say, we are writing restaurants. We are writing restaurants that focus on fast casual, that have annual revenues of up to $2 million and are franchised. Then you provide clarity, and then your agents are going to go to you because you've got this particular program, as you put it, and they're going to be able to win. So then when a risk comes by their desk and it's everything you've shared except for, well, it looks like this particular restaurant has liquor exposure. That's not where I'm going to send this risk to this carrier partner that just came to me about the program. I'm going to go over to this MGA who has a specialization in restaurants with liquor exposure, right? That's how agents today are starting to see the evolution of our industry is in specialization. And that's where a lot of the wins are coming from just growth as a carrier and MGA.
Well, Brando, as we start to wrap up here, I wanted to ask you, if you could look back in time, what advice would you give your younger self?
It's a great question. I would say stay true to your authentic self. And the reason I say that is because early in my career, I was, given feedback that I came off a little bit too arrogant. And I will tell you very candidly that it threw off my confidence. And I started to shrink myself as I like to explain. And I played smaller than I was capable of. And it wasn't until I reconnected with a former manager who I highly respected, and he recognized what had happened because he hadn't seen me in a while. And he told me, I want the Brando I hired before, the guy that was featured in magazines, because back then I was featured in a few different magazines. And that conversation was a turning point because it helped me regain my confidence, and I stopped apologizing for being bold. So I would tell my younger self, don't let other people's discomfort with your confidence make you question it, because there's a difference between arrogance and conviction, and the right people in your life are going to know the difference.
Yeah, that's really interesting. Well said. I wonder, and my friends out in the Midwest might not like this very much, but I grew up in New Jersey where people are extremely blunt. Although in New York City, worked in New York City where people can be really blunt. It's not that they're rude. They sound rude, but they really are kind of earthy. They'll talk to you forever. They'll give you directions. It's just a different feeling when you go out to the Midwest sometimes that you drop a New Yorker into Des Moines. It's like, whoa, man, slow your roll. Like, what are you talking about? It's just a different attitude out there. And I am overgeneralizing totally. I get it. I'm probably offending people, but I just know that it feels real to me. And I wonder if that's kind of what happened, where it's like it sound arrogant, really passionate. I can tell listening to you, you're passionate about these things, and you're articulate, and you want people to win. That's been your mantra your whole life, and so why beat around the bush? Everybody does that too in the corporate world. Like, let's have another meeting. Let's socialize this. Let's do this. Well, it's just going to take more time. We know what we got to do. So that's the conviction you're talking about. So I wonder if that's something to do with it. I don't know. I'm just postulating.
No, I think you're, definitely right in that. And again, I've worked across the entire country, and I know that there are differences culturally between different parts of the United States, and that's what makes this country so great, right? Is that there's just such a diversity of ways of thinking, cultures, and
oh yeah,
again. Yeah, I lived in New Jersey. I lived in New York. I lived in, again, Connecticut, Rhode Island, California, Iowa, and each one of them is just different cultural norms. And I think you may be right, and maybe why I found a tremendous amount of success in New York City, because I did regain that confidence and I showed up differently.
Yeah, that's interesting. Okay. Well, good. I'm glad that I'm glad your journey. It's not ever a straight line, so that's the way life is. It's got some curves, and you have to kind of surf your way through it. Now, tell me one last question before you go, Brando. What is Urbanely Affable? What does the name mean? Why did you call your consultancy that?
I grew up a huge James Bond fan, and I remember when I was much younger, the word urbane was used to describe James Bond. And I went up to the dictionary, look up, what does urbane mean? And urbane is a synonym for cool. And I thought that was just awesome. Like, what a great way to describe somebody that is just cool, collected, charismatic. So that word stuck with me. And affable is a synonym for social, somebody that is social. And I think of myself as being a very, social person. I enjoy networking. I enjoy building relationships. I enjoy working, with folks. I am horrible at working in a silo, so I'm always reaching out to partners anywhere that I'm working in. So I basically took these two words that I think are a reflection of who I am. Goes back to that, being bold. So urbanely affable is just a way of describing, myself a little bit and drawing back from just my childhood experiences.
That's awesome. That's really cool. I like it. I like it a lot. I like James Bond a lot too. I've seen every movie 100 times.
You and me both.
Even all the completely inappropriate Austin Powers takeoff of all the Austin Powers movies, takeoff on James Bond. Those crack me up too. But well, thank you, Brandon. I wish you good luck with your work. And if you like people, which you do, and networking, you found a great, I don't know how you got into insurance, but it's definitely made for that, and the relationship business that it is. So I wish you all the best with your business.
Thanks so much, Peter. I really appreciate it, and I'm a big fan, and I look forward to, again, seeing all of the great work that you're putting out there for us.
Thank you, Brando. Have a good one, pal.
You too.
This has been On Point with Peter Van Artryk, a podcast presentation of Wells Media Group.